Good afternoon, everyone, and welcome to today's Learn at Lunch webinar. In today's webinar, Roger Sauls will discuss findings from his most recent land values survey. Feel free to ask any questions using the chat window, which may be accessed by clicking the chat button at the bottom of the screen. Roger will answer questions at the end of the presentation. For more information about farm management topics, please visit the eFarm Management website. I will share a link to this page in the chat window. Roger, I will turn it over to you now.
Okay, Brent, I really appreciate the opportunity to visit with all of you out there today. And this is time once again for the annual Oklahoma Land Value Update. And so once again, we will talk about and I'll show you some slides as to the recent trends and patterns and some of the factors driving the land markets in Oklahoma. We'll talk about what's going on in the farm economy and how that translates into the ability to pay for farm ground. And at the end of the presentation, I'll give you my 2 cents as to where the land markets might be headed for the remainder of 2020. So before we go any further, it's important to note that according to the Ag Census 2017, the ag real estate markets in Oklahoma is comprised of 1/3 cropland, 2/3 pasture ground. The growing forage is the big ticket item in the state, and the livestock industry, especially cattle, is the sector that does utilize that forage base. 80 cents of every dollar received comes from the livestock sector. And so while the grain markets do influence the cropland values out west, like the soybean field shown on this slide, it's really the livestock economy that drives the bus. That's the mover and shaker in terms of influencing those markets in Oklahoma really as a whole. So before we go into the 2019 results, I wanted to talk a little bit about the study that we perform annually. And it is really a market-based assessment since it reflects a sample of the sales transactions that occur in Oklahoma annually. Now, the typical farmland transaction was about $340,000. Now, this is land only, it's not improvements. And, a number of those sales were a lot less, and a number of these sales were well into the millions. But we had a number of data points of which to generate those results. The more data points you have in our study, the better it does reflect the land transfer market. In fact, we had over 1,500 sales tracks to examine, which is the largest that we have had in 12 years. Now, moving over to USDA NAS, they also provide information on land values. And they release those findings in August, I believe, of every year. But they look at the markets from a little different angle since they are doing a survey-based assessment. They ask the respondents as to the values of land within a sampled land segment. And these respondents are typically ag producers that own and operate these particular pieces of land. And then they compare those numbers to earlier numbers to get that land value change. And so even though the perspectives of the market is different, the results from these two sources of information are really quite complementary. And I'd like to once again thank the Farm Credit Associations of Oklahoma for providing that opportunity of providing that database and also with their assistance with our research and educational efforts. So let's look at the 2019 results and this is a composite since 1971. But when you look at all land types, the markets have been rather resilient. The statewide values for Oklahoma in 2019 did increase about 3.8%. Now that's shown by that sort of burnt orange line. The solid green line is your cropland, the dashed green line is pasture. If you look at pasture and cropland, you can see a sort of a divergence there. And for the 6th consecutive year, pasture outperformed cropland. And, typically the land markets, and especially if they're truly an agricultural production, You know, it's the influences in terms of farm income and credit conditions that can really play a big role in determining what those values are. I don't have the latest 2019 figures for net cash or net farm income for Oklahoma, but I can tell you that in 2018, net cash income was down 26% and net farm income declined 35% from that high water mark in about 2014. If you recall, in 2014, we had great, grain prices, the cattle markets were robust, and this, the stars and planets were perfectly aligned. And so I don't care how you measure it, when you take out that much money out of the ag economy, you take that much money out of the producer's pocket, it does impact their spending on Main Street and in the ability to pay for land rentals and land itself. So let's move on to the summaries by region of the state, as well as the statewide composite. And just because the statewide average was up doesn't necessarily mean that the land parcel that you own and operate performed in the same manner. The change in land values has not been uniform across the state. You can kind of see that. It can be difficult to interpret a state average when so much variability exists in land values based on the quality and quantity of land in any given region or area, and those local supply and demand fundamentals. The overall average is truly unreflective of any one market. And so when you're averaging the price per acre of all sales across Oklahoma, what tends to happen is areas with high sales volume drives that average, and we'll talk about that in just a moment. So this is another sort of representation of the results, not only over the past year, but over the past 5 and 10 years by region of the state and by land utilization. And let's look at cropland first. Now, cropland usually comprises about 15% of our sales database, and almost all the cropland tracts in our database is located west of I-35. So one takeaway from the slide is that the statewide average for cropland has witnessed some weakness over the past 5 years. Essentially, in 2019, it was flat. And so, this is pretty reflective of some years of poor commodity prices in the cropping sector. And we've witnessed some market corrections since the peak in 2015 in our study. Now, over the last, say, 5 years, we've seen some declines. Really, over the past 10 years, we've seen some gains, overall gains. And about, a little over 5% per year. But, most of those gains really occurred during the first part of that 10-year period. Over the last 5 years, we've had to give some of those gains back, okay? And so we've made some adjustments in that particular land utilization. Let's go back. So moving on to pasture. Over half the sales tracts are classified as pasture in our data set, and almost half of those sales tracts are less than 100 acres in size, and over 80% are less than 200 acres in size. So when you compare that to the cropland parcels, the average cropland parcel is about a quarter section. Probably no big surprise there. But when you look at the values of those quarter sections, they're not near as high per acre as those smaller pasture parcels that we have a lot of. And that's why the statewide average for pasture ground is higher than what you might expect, and in fact appears higher than cropland. Markets in the eastern region of the state, where they are predominantly pasture, have generally outperformed those in the west in recent years, especially over the past 5 years. And I also might note that this is the first year in our study that we've topped $2,000 overall, considering all tracks, all types of utilization, and a mixture of each. Now, I look at averages a lot, in my research here at OSU in regards to this particular study. But also I look at the 3-year weighted average, and it's another statistical procedure that I feel allows some improved reliability when analyzing some of the results, looking at those trends and patterns over the years. because it tends to smooth out those year-to-year variations. And so the values, as shown by the series of data points shown in the brown line, are weighted based on the number of annual sales during any given 3-year period. And so when you look at that 2018 data point, which is the end of that brown line, that represents 2017, 18, and 19 sales data to calculate that particular data point and that estimate. So in reference to the Panhandle, we see some year-to-year variation, especially since 2014. Now, a lot of this is due to the fact that we have some low sales volume, to pick from in the Panhandle region. And then, we have a change in the composition of those tracts in any given year. Pasture versus cropland. How many of those tracts are irrigated? Okay, of those cropland tracts. And then the size of those tracts. And so there's a difference in that composition in any given year, and that's driving that average. And so, when you weigh those based on that brown line, it tends to smooth out those annual variations, as shown by the blue line. And I would surmise that the markets in the Panhandle are basically moving sideways. They've leveled off over the last couple of years. Okay, so let's take that same concept and look at all the regions of the state. Now we have 9 regions of the state. And so the red hues represent the western 1/3 of the state, the greens the central, and the blues the eastern 1/3 of the state. And one thing you might notice is that the eastern region still shows some upwards momentum, while the western regions, where most of the cropland is found, has leveled off. So then digging a little deeper based on the land utilization by region, and most of the cropland is found in the western regions as well as the north central. It basically reconfirms that notion that, the cropland markets have undergone some adjustments and corrections over the last couple of years. And, especially in the north central region of the state, we've seen some corrections in those cropland markets since those peak years last mid-decade. And so then when you move on to the pasture values by region, it's more of that same reoccurring theme of leveling off in the west and the strength in the markets in the central and eastern portion of the state. Once again, many of the transactions in our land value database, especially in the eastern regions, which represent pasture, they're predominantly pasture, they are less than 100 acres in size, certainly less than 200 acres in size. So a good number of those are like your 40 to 60 acre tracts, that represent some of these small time operators. They might have a few mama cows, a few horses, sheep, goats, a few round bales. That land is still in agricultural production, but most of their livelihood comes from on-farm income. And they might have some recreational interest also. But we've got a lot of those parcels that come into play, especially in the eastern regions of the state, and some of the, especially in some of the central regions of the state also. Now you might ask, how do our numbers compare to USDA's? As you can see, the trends are similar, but they're certainly not identical. And just think of it as looking at the land markets from a little different perspective. You have these survey-based impressions of the markets. That's the USDA studies versus actual market sales, which is ours. So where we've seen a continued correction in the land, in the cropland markets, okay, and it has corrected about 11% since the peak in 2015. USDA surveys were showing a 2.5% increase in 2019. We showed a flat market, they showed a 2.5% increase. And so it does appear that both estimates from each study might be trying to converge as we go forward, and we'll just have to see how close those estimates get as we go into 2020. Now also, when you move into the pasture land side of the coin, our values are consistently higher than USDA's. It's a kind of a lateral shift. And once again, that's just because we have a sizable percentage of the tracts in our data set that are less than 200 acres in size, that are priced several $100s higher per acre than these larger tracts. So the big $64,000 question is, where do we go to from here? It's a topic of conversation in the coffee shop, in banks, when you visit with your appraisers. And I get that question also. And, I've asked these old boys and they didn't know. And quite frankly, I don't know for sure either. But there are some clues as to, that can give us some indication of what may occur in the land markets down the road. And it really boils down to some land market influences and knowing what those factors are. And it's all a balancing act between, say, interest rates and your commodity prices and resulting net farm earnings, your debt levels and credit conditions, the availability of stimulus funds, and the participation of some of these non-farm investors. Are they becoming more active? And so it's a matter of sort of balancing those strengths and weaknesses in the markets and what is applying pressure, what is applying strength, and then balancing out as a whole. So let's jump into the interest rates first. And they have been fairly low. We continue to be in a low interest rate environment. Now, if you recall about a year ago, I was looking at interest rates that were looking at a slow but steady climb. They were still historically low, but we were on the increase. Well, really, since then, we've pretty well given back all those increases, and especially since the first of the year, it's really dropped really quite a bit. Remember back in March, the Fed dropped its target rate, which is the interest rate for funds lent out to banks, by almost a full percentage point. And so most other interest rates agreed upon between lenders and borrowers are benchmarked off of that target rate. For instance, your prime rate is benchmarked off of that target rate. And the prime rate is currently at 3.25. That's pretty low. And so interest rates on all types of farm loans have declined accordingly. And some of these rates are at or near historical lows. For instance, your 30-year mortgage rates, they're close to 3%. Compared to the world back in 1979 and 1980, some of you might remember this. I certainly do, kind of ages me. But, the target rate was 20%. Today, when you compare it to that level, today's interest rates almost seem like free money. And so it's useful to think about how interest rates affect prices in the ag sector. And so for agricultural goods that a farmer wants to buy, interest rates can matter, and they really do, because lower interest rates tend to mean higher prices for assets. Two basic reasons. Well, it makes it easier to finance purchases because those repayment amounts decline. So for example, when a farmer sees smaller borrowing costs to worry about when you buy a tractor or buy a truck, any other piece of machinery, he or she can bid more for that capital purchase. And the same applies to land. And secondly, interest rates represent returns on alternative fixed income investments to farmland. Fixed income investments like your government securities. As interest rates fall, the attractiveness of fixed income investments like your 10-year, 30-year treasury notes, they fall relative to farmland, and it provides support for those farmland prices. Now that's where your non-farm investors might make an impact, because they see all the instability in the the stock markets, and they know and they notice the low returns to these fixed instruments like government treasuries, and they might turn to land instead. People like tangible assets in times of uncertainty, and they have access to land auctions due to the online nature of these auctions at the present time. So instead of having to be there in person, they can bid on these auctions, hundreds or thousands of miles away. So then let's look at commodity prices and those impacts on farm earnings. And this is looking at the cow-calf sector, which is really, the bread and butter of many operations in Oklahoma. And, much really depends on how the markets do recover from the COVID-19 impacts that we've seen. and how much, the Corona Food Assistance Program does assist some of these producers in 2020. Now, the cow-calf sector is expected to see some positive returns in 2020 overall, and even better returns in 2021. And this is looking at sort of returns above operating costs, sort of a net cash flow position. And certainly, there's going to be some producers that will still be pressured due to liquidity, and the returns will be nominal, maybe even negative. We see that, in even good years in a relative sense. But, it's those producers that will be making this, making money this year. They're doing really a good job of managing their forage base. They're keeping good production financial records. They're following up that with a good job of marketing, and they're scrutinizing every dollar that they're spending in their operation. They're trying to get the biggest bang for every buck that's being spent. Those are the individuals that will persevere and survive in any downturn market. So anyway, this will provide a little bit of support, and certainly in those pasture land, say, regions of the state where the producers are really relying on those tracts for their bread and butter, for their livelihood, okay? But, overall, there's some pessimism in the markets at the present time, certainly by bankers and the lenders out there. The Kansas City Fed surveyed the bankers in their district, of which Oklahoma is a part of, and they just noticed and asked, these bankers about, the farm income levels. How does that compare to a year ago? Where in the first quarter, 60% said they were lower. And then for the next 3 months, which, is ending in June now, this month. And in the second quarter, 75% that said that farm incomes would be lower. So this is, by itself, applying some pressures on the markets going ahead, because certainly that leaves less money in the typical ag producers' pockets. But also, that does impact the balance sheet and your liquidity and your ability to, renew your loans for the upcoming year. And so we are seeing some increases in carryover debt. Certain regions of the 10th district, Nebraska being one, but Oklahoma also being the other. And of course, that is also weighing on the markets. It puts steady but modest pressure on liquidity. And so, that by itself is also applying some pressures on the markets. Now, there are some situations where, we can refinance our debt, especially with these lower interest rates. That might be an opportunity. But, that may not work for everyone. And so we may have some situations where we have had to, say, liquidate some of our least productive debt or least productive assets. It could be some of those land parcels that just didn't fit very well in our farm portfolio. If it's better in somebody else's farm portfolio. That might be part of the reason why we saw more land tracts in our database in 2019, is because we've had a number of these parcels that were being sold just to improve their balance sheet situation. Now, fortunately, we have had some federal stimulus funds, like your market facilitation program that's available. That dealt with those trade disruptions in 2018 and 2019. And in addition to that, we did see some, and we continue to see these producer safety net programs like PLC and ARC to help mitigate some of the price and revenue downside risk with production ag. These federal programs provide some limited support to landowners of ag real estate and to tenants with their rental payments. Think of, $207 million over 2 years seemed like a chunk of change, and it is, but when you spread that much money over all the number of thousands of farms that we have in Oklahoma, or the number of producers that we have in Oklahoma, that's not so much on average. Obviously, some producers, it did really make a difference. It did enhance their bottom line. And other producers, they didn't benefit from this program at all. So it's just really it's an all depends situation. But for a number of producers, it did make a difference and it kept them afloat. So I think in a summary slide, this is a good way to state it. And this was available from the Kansas City Fed. They kind of spoke out those words for me, you know, that the incomes have continued to decline and the expectations of these farm income levels continue to decline as we go forward. And it really depends on, you know, how well we emerge from the COVID-19 impacts of our economy. But, you know, surprisingly, land values have held pretty steady. And so really in summary, this is the summary slide here, is that despite the challenging environment for farm income and credit conditions that we've seen, you know, farmland values have remained remarkably stable. You know, the cropland is really was flat last year. Pasture was up about 3%, all tracks about 4%. And then the big question is, what will happen to the values in 2020? And, you know, there are some mixed messages concerning the strength and direction of the land markets going forward. You know, it's anyone's guess. But if I had to play the role of Mr. Anybody, my educated guess is the markets will hold steady for the remainder of 2020. I'm going to talk like a two-handed economist here. On one hand, we have lower interest rates, okay, that provides support. On the other hand, we have commodity prices that continue to disappoint. You know, it's pressuring liquidity and credit conditions. I think one of the positive factors is that we have those safety net programs like ARC and PLC, and stimulus funds like MFP that came into play in 2019, as they provided much needed revenues to landowners and rentals. You know, stimulus funds will really help going forward, but really much depends on where the economy lands after the initial fallout. And obviously it's a situation that bears watching. So I really would encourage you to check out our land value website here at OSU. The address is on the left-hand side. Now, we haven't totally updated this for 2019. We're slowed down also due to the impacts of COVID, but we're going to get this updated as soon as we can. And I'll certainly let the extension field staff know when we have updated this particular land value website with the 2019 results. I think we're about halfway there. But also, in addition to our land value website, once again, check out other resources for land values, such as the Kansas City Fed and also USDA. And I think together they are complementing our land value study. And I think overall they provide some good information of which you can base your decisions on. And allows you to make some better decisions if you're a buyer or seller in the markets. So here we are at the very tail end. I really appreciate your time and attention this afternoon. I thank you for stopping by. And hopefully I gave you, the viewer, a better and broader understanding of the land markets in Oklahoma, some of those trends and patterns where we've been, where we're at, and where we might be in the next couple months. Also, I'd like to remind you to fill out our survey for these webinars based on that survey link, and let us know how we're doing and how we can make a good product even better. So short of any questions that you might have, I'll thank you once again for tuning in. Have a good rest of the day. Hopefully that most of you have received some of those $1 million rains that we've received over the past couple days. And I'll turn it back over to Brent.
Thank you, Roger. As Roger mentioned, if you have any questions for him right now, you can enter them into the chat box and Roger will answer them for you. And Roger, there was one question from Brian Fracking. He asked as to any guess to the percentage of out-of-state ownership of land.
You know, that's a good question. It's a distinct minority, but you know, active. Well, active farmers and ranchers probably are the majority of the landowners in the state. There are some absentee landowners that are living, off-site or even out of the state. And there is based on other studies by other states, like Nebraska, for instance, it's up there was less than 5%, these non-farm investors. And some pockets, some regions, it's a little heavier than others, depending on the nature of, whether it's cropland or pasture, or if it's close to some of these urban areas. But I think, statewide, overall, it's a pretty low percentage.
Thank you, Roger. And I did share the link to the webinar survey in the chat box as well. So as Roger mentioned, we do appreciate your feedback on this. I don't see any other questions. So if anyone has any other questions, now is the time to ask them. And we do not have our next webinar scheduled, but at some point, July, August, we'll have another webinar, and I will mention those through our normal avenues, social media, on our farm management Facebook page, as well as our email list. So you all will hear about any the upcoming webinars as they are scheduled. I still don't see any more questions, so thank you everyone for joining us today, and until next time, goodbye.